shit.
Hey, everybody. It's the Flow Show. I'm Sean McLaughlin. That's Steve Straza. Steve's got a tea time we got to get to, so we got to make this quick. Straza, how was your weekend?
I wish I had a tea time. I got trades I want to make. Stuff is moving here this morning, brother. It was good, but like I said, I'm not a father, so I didn't get celebrated this weekend like you and so many others did. You know, it's kind of
Yeah, I had a tepid oh, we're getting my regular screen freeze, which is awesome, by the way. But
I,
anyway, at least I look good. It's a good
I love
snapshot of me.
I love that you're freezing on my favorite Bitcoin miner.
Anyway, all right, let's get into it. Straza, before we went live, and for those of you who don't know how we do the Flow Show, this is improvised, right? Like, I don't know what Straza is going to bring to me. I don't know what ideas he's got, but he brings me ideas, and we put together an options trade idea. That's the goal. We don't always come up with a trade idea, but often we do. And this is how the sausage is made at All Star Charts. But I kind of led the witness a little bit before the show. I said to Straza, I'm looking for some bearish ideas. So if you got anything bearish, come at me. So with that lead up, Straza, what do you got?
So, as director of research, I want to just be like, no, I'm not doing this for you because I don't think it's the right move, but I get it. It's not crazy. And also, I think you should preface this with what you do is often different. You will look at your book and say, "Oh God, I'm awfully long right now." Right? These are all going to correlate. And God forbid we're wrong positioning that long. I don't have anything in the account that's really going to help me. And then you'll add short exposure, not as a bet, but as a diversifier. Is that fair?
That's totally fair. And look, Gene, I'm going to play with my camera here real quick because for some reason my camera is staying frozen. So if you just want to zoom in on Straza and leave me as the voice of God, that's cool. But look, yeah, great. So the reason, Straza, that I was feeling like I want some portfolio diversification, there's actually two reasons. Number one, I don't know if you felt this on Friday, Straza, but the S&P, the NASDAQ, they both closed at or near all-time highs. At the index level, it looked great. But I got a whole bunch of long positions, and I got the shit kicked out of me on Friday. My portfolio sank. So to me, that's a red herring, right? Something's up. Something's not right in the universe. And so that just makes me think I don't have enough short exposure just in case the character has changed. And then that was the first reason, Straza. The second reason is we don't talk about our secret weapon at All Star Charts often enough. Our secret weapon is located overseas. His name is Grant Hawkridge. That guy is the All Star Charts secret weapon that doesn't get talked about enough. And you may remember back in February, I think it was February, plus or minus a few weeks, there was a certain someone within All Star Charts who was pounding the table about a certain rug pull that was likely to happen in the stock market. Meanwhile, while that was going on, our boy Grant just kept crushing us with charts saying, no, this is wrong. The market is strong. This is a good time to buy. The bull market is still going. Grant was there and he was fucking right. He nailed it.
So we're lucky, Sean. Let's talk about this right now because we have the best analyst team on the street and we are so blessed by it. A lot of people are on the internet talking about bad breath right now, right? Everybody's a breath expert at different times in a bull market. Grant's job every single day is to come to his computer and stare at breath charts and market internals charts literally all day long. The man knows breadth. He knows market internals better than anybody. So we have a guy who can literally just focus all of his time and efforts on that one discipline of technical analysis, and it ends up being, a sweet value add for the whole team.
Right. Hey, Gene, I got my camera back. I switched to a different camera, so if you want to bring me back on, we can. I don't know what the hell's going on with my other camera.
So your point is that right now...
Hey, let me finish on Grant, though, because there's one more thing. I was talking about how he had all the data back in February suggesting that no, the rug pull's not happening now. This is not the place for the rug pull. And he was right. Okay. Now, I'm saying that because today, now, I don't know if you saw all the data that he was throwing into our Slack channel over the weekend, but he's been throwing a lot of stuff up there that is certainly posting up a lot of red flags. We've got new lows leading new highs. We've got no expansion of the new highs list. We had the New York Stock Exchange only had what 12 new highs last week or something crazy.
Yep.
He threw up a whole bunch of stuff, and it caught my attention. I'm like, okay, he's not saying that we're heading to a bear market or that this is the top, but he's way more cautious now than he was back in February, and that's got my attention.
I love it. And there were some other people on our team that were very bullish in February as well. And the big difference between February and today is that breath really wasn't bad in February. It just never was true. It was not bad. Right now, it is trash. But here's the thing, okay? If you've participated in markets long enough, here's what you find. One of the secret sauces that we have is buying corrections, buying weakness, buying, as Jeff DeGraff would say, oversold conditions within the context of primary uptrends. Now, if you look at something like the NASDAQ 100, we're up like 14, 16% from the late April lows. But if you look at other indexes, maybe something like small caps, we're actually down big just from the May highs, right? We're down about 5 or 6% now. Not quite oversold, but it is corrective action. The broader market has been correcting, not making new all-time highs like the NASDAQ and the S&P. What does that end up looking like when you're buying oversold conditions or corrections in primary uptrends? You're buying weak breath in bull markets. And it's uncomfortable. And a lot of people just don't do it. And they miss out on these great entries. But that's what we do time and time again. Last October, we're buying really, really weak breath in a bull market. Some of the best entries we got. I don't think this time is much different. The problem is, when does that weak breath regime end and participation start broadening, right? If we enter trades this week and this lasts for another week or two, those trades could be pretty busted by then, right? By the time the selling is done.
Yeah.
It's all about timing at this point. We do believe it's still a bull market. We do believe the primary trend reasserts itself for the broader market, right? But we don't know if that happens today, tomorrow, next week, or next month, right? From last July to October, Sean, we had 3 really bad months of bad breath. Hasn't been that long at all this time around.
Right.
That said, let's dig in and look for some bearish charts. You made a good point. You got stopped out of a lot of stuff last week. I did too, and a lot of it was materials. Were you getting stopped out of your materials positions?
Um, I don't think that I have any materials position. A CNX, is that material?
Yeah, that's
Yeah, I'm
aluminum.
about to get stopped out of that one.
Oh no, that's oil and gas. Yeah, so wow, look at that. Really come off in a big way. Energy too, getting stopped out. So I got stopped out all my steel stocks, all my copper stuff. I have two different ideas and I want to compare and contrast them. They're very, very different. I want to start with a chart of copper. Throw me up, Gene. These are copper futures. I already have it marked up. I'm not going to change it. I was talking about this on the internet last week. So what is this? Fail breakout. This is spot copper, right? We knocked on the door. This $5 level is so huge. We thought we were going to get a massive consolidation pattern breakout. This is also in the context of a much larger base that dates back to the last commodity super cycle. We broke out. We all got really excited. Everybody was talking about copper, middle of May, and then we failed miserably. We're right back in the box, right? I think we have a little support zone here. Point is, copper stocks confirmed it. Here's copper stocks index, COPX. Throw that up. It's the same chart, Sean, right? We knocked on the door. We knocked on the door. We blasted through it. And then they kicked us out, failed miserably right back into the box. Now, Freeport McMoran, it'll be super liquid, highly actionable. It's probably an options market favorite, I would imagine, for some people. We can draw this chart in the same exact way as those last two. But then I do have a qualifier to all of this. So I would draw one small bar here and another one at the highs, right? We could circle a little failed breakout here. Point is, we're in a massive range. And these new highs just failed, and we fell right back into the box. Then what I would do here is I would drill in and play this top, right? So the neckline of the top comes in right around this first resistance line I have drawn here. Sean, you could pretty much say this is breaking today, right? So then
Yeah.
what we're doing in this case, we'd be playing it back towards some sort of logical support zone. We could even use VWAPs for this, but the point is we're back in the box. From failed moves come fast moves, so we'd be looking for some quick downside follow through in something like this. Now, do you like it? Do you not like it? I want to contrast it with another one.
I like it. From an options trading perspective, I'm just trying to look at the volatility is high right now because this obviously is not catching anybody by surprise, which is unfortunate for us. Um, and so when the volatility is high, I don't want to just buy puts. I'm looking at a put spread, but I don't love it in September where like I buy the 45 puts and sell the 40 puts. It's
Yeah.
going to cost me about a buck 50 or more. I don't love that, but maybe instead, I mean, how bearish are we? I mean, do we think this thing's really going to fall down or do we
No.
think that it's not going to go up? Because in that case, we could just sell a call spread and maybe that's a better play.
I think messy uh is a better bet than down. In
Okay.
fact, I think even with something like this, Sean, you want to be careful of a quick hook here higher, you know?
Okay. So how about this? Looking in August options, they have 60 days to expiration right now. So that's generally as far out as I want to go when I'm selling premium.
Mm-hmm.
We could sell a August 45.50 call spread. So it's a little in the money right now, but sell the 45 calls, buy the 50 calls. We can get 225 for it, which means if we're wrong and this thing rips back up to, up to $50, the most we lose in this trade is 275 in a worst case scenario. But if this thing keeps falling and doesn't need to crash, but if it keeps falling and gets below 45, we're sitting in a nice little trade. We can make, I like to cover these things at half of what I sold them for. So if I sell for 225, maybe I'll buy it back for a buck. And
Explain to me, how do we win most on this trade? We want it to stay in a range between where are the strikes?
we don't want it to stay in a range. We want it to be below 45.
Below 45.
Yeah. So
Yeah.
obviously, if we're selling a call credit spread, our upside is defined as well as our downside, right? The most we can make is the credit we collect today. So we would get about 225 for it today. And if this thing were to go to zero tomorrow, we keep that 225 and that's it.
What if it doesn't break below 45? What if it dances here around 47 and 45? We don't make any money.
If it dances around 47, I mean, if it stays between 45 and 47, we're actually probably not going to lose that much because if
Okay.
we're collecting 225 right now, that means the break even on this spread, the break even level at expiration day would be 47.25. That's 225, the credit we received today, plus the short strike, which is 45. So 45 plus 225 would be 47.25. That would be our break even level on expiration day. So if it stayed here, didn't go any higher than here, but didn't quite get below 45, at worst case, we're going to break even. We may still make a little bit of money.
Here's the problem with this one for me. We're betting on downside. However, we're looking at a nice range, some sideways in the context of up, right? The trend coming into this range was up. I believe, and any technician would believe that they would err in the direction of the underlying trend, that this eventually resolves higher. So I don't like putting a bet that's, betting on prices to fall too much. We're already 15% off the highs from last month, right? How much more do you want? It's really a range bound thing. I think you're going to like this one more, Sean. So look at this chart here. We came up into sideways in Freeport. How about one where we went down into sideways, right? We want that underlying trend with us. I would much rather bet on downside follow through on something that's coming off of a nasty structural downtrend. So this is Square. PayPal's broken in a nasty way. Just the past couple of sessions, Square usually does something similar. We can draw this one up similar to Freeport, right? It's just the underlying trend is moving in the opposite direction. So if we do that, what am I saying? We had a big downtrend into a range, right? So this is Square. Now, we know the underlying trend is down. Now let's zoom in, look at this range. This is a really clean top, Sean. And if you look at the action in PayPal just over the past couple of days, like I like it even more. I could draw a silly little trend line breaking here, but I would rather just draw a nice little neckline that we're snapping through right here today. If you look at momentum, there's still room to go. We're not quite yet oversold. The daily MACD is crossing lower. Earnings are not until August. I think we could bet on this top being a valid one and Square heading back towards the lower bounds of this larger range. So target 50 And then if you really want to be aggressive, we probably revisit those all-time lows if we're at 50.
All right. This trade I love a lot more. Here, there's a couple of reasons why. Number one, Gene, if you want to pop up my screen real quick, we'll show this because it shows well on my screen. Look at the bottom. I got the square chart up here. Are we still calling it square or is it block, by the way? Sidebar.
I don't participate in the name changes for the big techs.
All right, we're calling it SQ.
And Google and Square.
Yeah, we're calling it SQ. Look at the bottom of my chart. This is implied volatility. Okay. Look at where we are, buddy. We are like the lowest levels, near the lowest levels we've been all year. This is what I like because this means that even though the stock is not trending, I mean, it's trending down, but for whatever reason, market participants aren't scared. That's an opportunity for us, Straza. Yep. If we're seeing something that others aren't, I mean, there's probably a lot of technicians out there, amateur technicians, who are looking at this level we're at right now saying, oh, it's support because look, go back to earlier in the year. This was support right here at 62. So nobody's scared. They think it's sitting on support. And maybe they're right. They could be right. But if they're wrong, we can get paid by being owners of long puts right here. And I'm looking at these September 55 puts. We can get them for under $3 right now. I like that, especially if 50 is the first target with the potential for a lot lower. Yep. This trade could play really well. I like this. I like this one, Straza.
I might even put it onto just for fun. But you know what else I really like about this? I'm like convincing myself more and more. This is a laggard in a leadership area, right? So we're talking about how the market is so thin. It's just mega cap tech, big growth. This is big cap tech, right? This is a NASDAQ 100, S&P 500, mega cap growth stock. It hasn't been working in a tape where all of its peers are working. If we're making a bearish bet here, we're betting that the strongest ones, the leaders, catch down to the weakest ones, the laggards. This one should be a leader in this tape, but it's not. So if we do get that move where mega cap tech finally throws in the towel here, catches lower to the broader market, this thing should get blasted just based on its relative weakness.
Yeah, I like it. And the way I'll play it, Straza, is look, our risk is defined. We could buy the puts for under $3. Again, I'm talking about these September 55 puts. We can get them for under $3 right now.
Is that the 25 strike?
The 55 strike.
Yeah, but is that the 25 delta
contract? It's close. It's got a 27 delta. Close enough.
You could even go to 50, dude. Go crazy.
You could. You'd pay about $1.60 for them. I like the 55. I feel like we have better odds of success. But here's how I'll play it, Straza. I'm going to buy these 55 puts. And if we get to 50, if and when we get to 50, I'll sell half of my position for whatever I get. That's it. And then if we get down, I'm going to hold the rest to 40. If we get to 40, then I sell the whole thing and pocket a really nice profit. Wow. And that's a little bit different, Straza. Maybe we should bring this up too. It's a little bit different than when I do, say, a long call position. When I do a long call position, I like to always leave a piece of that position, even if it's hitting our upper, price target or resistance level, because the thing about uptrends is sometimes they go a hell of a lot further than you think they can, and there's theoretically unlimited upside. On the downside, on bearish plays, and you and I've vented our frustration on this all the time, downside moves, they're swift, they have violent pullbacks. I don't want to sit through that. I'm going to take the profit off the table if we get down to 40 because it'll likely bounce at that point, and who knows, it'll frustrate the hell out of us.
Also, shorting is hard in bear markets, Sean.
It is
harder in bull markets, right? And notice what Sean's doing here. He's not saying, oh, if the value of the calls or if the value of the puts doubles, I'm going to say no. He's looking at the price chart and then managing the derivative contract.
Yep,
that's the way to do it.
Yep. All right. Hey, look at that. We came up with I feel like this is a great bearish idea, man. We're bearish SQ. We're calling it SQ. You can call it whatever you want. We're calling it SQ. We're buying the September 55 puts for under $3, selling half at 50, selling the whole thing at 40, selling the rest at 40. That's it. That's our play.
Opportunities abound in this market, really.
Love it. All right, Straza, I know you got a tea time, so why don't you get to it? I
don't have a tea time. You know what? Maybe I'll make one just for you at this point.
Sorry for the video technical difficulties we had earlier. Well, I don't know what's going on. My camera's got gremlins in it. I don't know. But this has been the Flow Show. Thanks for tuning in. We do this. We try to do this every Monday. Hey, enjoy your midweek holiday, Straza. Random, unusual midweek holiday. We got Wednesday off. Wow.
Then I do have a tea time.
I don't know what I'm going to do with myself on Wednesday. Maybe I'll go for a hike. That sounds like a good idea. All right, everybody. Thanks for tuning in. We'll see you next week. Take care.
Short and square.
Short and square. Take care.